Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Streamline Capital. Real excited for today's show. We got great guest on the line. His name is Aleksey. And Aleksey, I'm going to let you say your last name for the audience, if you would, please.
The secret to saying my last name is you don't say it. Chernobelskiy is how you pronounce it.
All right, all right. I'm sure I would have been really close saying that, but appreciate the assist on that one. So, Aleksey, do us a favor. Tell us a little bit about yourself.
Yeah, thanks again for having me. I advise LPs full time on existing investments. If they have any challenges or they have questions on something that they currently invested in, or future investments. In other words, someone is contemplating investing in something and they need feedback that's independent. So I do that. I write to 7,000 investors every week on lplessons.co. And most recently, I started something called GPLP Match, which is basically, I guess you can call it like pseudo software, baby software.
Yeah.
It's baby software for matching GPs to LPs.
Yeah. Well, I love it. I started following you with your LP lessons, and you put out a lot of really good content. So let's start with, you advise LPs. How did LP lessons start?
Basically, I started writing on Twitter and LinkedIn. I believe in the beginning it was just Twitter. I only recently started on LinkedIn. And a lot of LPs started sending me messages that were along the lines of like, hey, I know you advise people on existing deals, but I don't have any questions. I know you advise people on future deals, but I'm not looking to deploy any money now. But I would like to learn in the meantime until, my next investment comes. Do you have anything for that? And I said no. Until I was like, well, maybe I should. So that's what got me to start a Substack, which is basically a newsletter where I write like twice a week. And at this point, I think there's like an archive of 120 articles on there.
Yeah, yeah, and it's really good stuff. I am an LP. I have a lot of LP shares in my own deals, and I occasionally will LP in other deals, but it's a great source for GPs as well, just to kind of, as I'm looking through here, I pull a lot of tidbits of wisdom out of there and like, yeah, I should be doing that. Oh yeah, I should be doing that, because there's a couple of them like, hey, here's what you should have in your pitch decks. I remember you're writing one of those and then going back
Yep.
and saying, okay, well, these are the things that I probably should add to future pitch decks. So anyway, I think it's a great resource and I love what you do. So for people listening, we'll put a link to this in the show notes. Now, I want to follow on question, and something we discussed right before hitting the record button. You advise LPs, but you do not raise capital. So I guess the question is, how does your business model work? I know there's a small fee to be in the LP lessons.
The revenue basically comes from the newsletter that's monetized for those that wish to pay. There's also like free articles on there. And then most of my revenue comes from consulting fees. So basically like I'm an existing LP, I need some help. That's a payment. I'm an LP, but I'm considering another new investment. Can you give me feedback on it? And again, that's like an advisory fee payment. I would say those three are the vast majority of the income. And then some of my income comes from GPs, assuming there's no conflict. I check on that first, but like some GPs reached out and they've asked me to give them feedback on decks, for example, because as you actually pointed out earlier, like it's a little tricky to put like a great deck out there, and LPs are incredibly bad at giving feedback, even if they have it. They'll just tell you like, I'm not liquid. Maybe next one, Brian,
Mm-hmm.
like, thanks for thinking of me. But in reality, they have like, 10 pieces of feedback that they're hiding and they're just not sharing with you.
When I'm putting decks together, I try to find like a happy medium, like a balancing point between too much information and what the LPs need to make an investment. I'm never intentionally hiding information, but if I put everything into the pitch deck, it's going to be 200 slides long, but
Yeah.
when I'm putting together these pitch decks, what's going through my mind is what are the most important things that we need to put in this deck for investors to be able to make a decision. And like you just mentioned, I don't get a lot of feedback from investors on, what they're actually looking for. If they don't like it, a lot of times it's just a no. So that's a good service to have out there. So talk about your consulting. Is it just multifamily? And what can people expect from you if they're an LP coming to you as a consultant?
Sure. I think roughly 70% of my engagements are within real estate alternatives, and probably about 50% of those are multifamily. which,
Mhm.
Brian, I think is pretty representative of the retail and family office money in the real estate. Like the majority of the money did go into or is going into multifamily. So I think that's not such a novelty. I think it's just like a sample size that is somewhat representative of the population. In other words, outside of multifamily, I mean, I've advised on office, I've advised on a ton of industrial outdoor storage, RV parks, hotels, retail. I mean, I like, almost every asset class at this point. Now that's like the 70%, which is real estate. Outside of real estate, I've advised on private equity buyouts, marijuana facilities on my desk right now, and venture capital, oil and gas, a take private transaction of a public REIT. Like, it sort of like varies. But like the vast majority is alternatives within real estate, as I said.
Yeah. So are you reviewing, pitch decks, PPMs? Are you giving people advice on the investment itself? I mean, what are they getting back from you
Yeah,
as
what do
far
they get? I'll start with what they don't get. What
Mhm.
they don't get is an opinion from me whether they should invest or not. What they do get is two things. So, first of all, I give them a question list, which they typically then just copy and paste and send to the GP. Typically, I will try to prioritize a list of questions to be sensitive to the fact that like GPs can't answer too many questions, right? So, and this is just sort of the world that I lived in when I was working at a public REIT. Like you sort of, when it comes to diligence, you have to like first send the most important things that will help you make a decision. If you're closer to yes as a result of the answers, then you send more. But
Mhm.
many times you just don't get to that stage, right? But at least you're sensitive to the GP by not sending all of the questions up front. So that's what I do. I give them a list of like detailed questions that I think are important. Of course, I'll spend time with them explaining why each question is important, and I give them context as to why I'm asking it and why it wasn't clear. And also, I go through the three pillars, which is basically like my methodology of evaluating LP investments, and I will give them feedback on each pillar within the context of that specific investment.
Okay. Interesting. Yeah. So you're not saying yes or no. You're kind of helping them, providing a framework for them to analyze, the deal.
My North Star, so to speak, is them understanding it enough to make their own decision. Like that's which is not necessarily amazing for business, right? Because they could be less dependent on me over
Hmm.
time. But I think that's okay. Like I want to make sure that they understand what they're getting into, they understand how to ask questions, and ultimately, a good outcome for me is a yes or a no that's well informed. That's what I shoot for.
Yeah, I'm surprised how few questions most LPs ask. I had one recently that asked a ton of questions. It was his first LP investment and lots and lots and lots of questions. And he kept on apologizing. And to me, it was just kind of like, what? I'm glad you're asking these questions, because I'd rather you ask them right now than after we close on this deal and your money's
Yep.
not liquid, but yeah, I had investors, this happened several times, but I've had a couple of investors go into our portal, sign documents, wire funds, before even talking with anybody from our team, and anyway, that's kind of like the far end of the spectrum.
For what it's worth, Brian, I don't know if you agree, but I actually think that's not good for either party. It may seem easy for the GP, like like I'm doing a great job, like I don't have to speak to anyone.
Yeah.
Um, and I think that's partially true. But
Hmm.
what's also partially true probably is that the LP did not do enough diligence and doesn't understand what they're getting into.
Hmm.
And then a year later, you're going to get a call that goes something like, "Hey, I kind of changed my mind. Like, can I just get my money back?"
Yeah.
And you're going to be like, did you like understand what you were getting into? That's not how this works.
In that case, it might be, who are you?
Exactly. Yeah, exactly.
I agree. I think when I approach this with investors, I want to build relationships with investors. It doesn't always, end up being a perfect situation, but I think when you have relationships with the investors, it makes for more, far more productive investment and everything else. So kind of a follow-on question, I don't know if you track this, but for the people who hire you, is there like an average check size? I mean, are you talking people who are like first-time investors looking to invest $10,000 to $20,000? Is it a wide array of abilities? Or, what's kind of like the average
Um,
to you?
I would say like the average check is probably 250. The reason is I think many times when people reach out to me and they want to invest like 50 and below, I just tell them you shouldn't hire me. Like that's a bad idea. Or like right now I charge 1500 for a deck, and I just don't think that makes like monetary sense.
Yeah.
Like at some point you're spending too much time, and I think in their head many times they're like, well, it's not so bad, like I'm going to invest 50 grand and maybe I'll make another 50 grand, like what's $1,500? But like that assumes that you're investing in this specific deal, and you don't need to do this 10 times. I guess just from my experience, it's pretty rare for you to invest in the first deal you've seen. Or at least it should be.
No, I agree. It should be.
Yeah.
It should be rare. I mean, obviously, you mentioned something earlier that I'd like to touch. It's super easy when people show up with no questions and just invest, But, from the other perspective, when I'm looking to park my money in different investments, if I don't have a really, really good relationship with somebody, it's kind of like one of my coaches told me in baseball, always let the first pitch go by. I don't know if that's good hitting advice, but one of my coaches said that to me, but let the first pitch go by. But I think it's true with investing as well. In my coaching program, it's kind of similar advice. I'm like, you're almost never going to invest in the first property that you underwrite, which incidentally, I hired a guy as my acquisitions about a year and a half ago. And I told him, don't expect to underwrite, 15, 20, 30 deals, before we get our first offer. And crazy, this is true. The very first property that he underwrote, we actually put an offer in and bought the property. But I think that's
I mean, it happens. It happens. Yeah, for sure.
Definitely the exception. Okay. Maybe not a change of subject, maybe a segue, but I also want to hear about your LPGP platform. How did that come to be? Is that an extension of what you're doing with your consulting and the LP lessons? Something completely different, but how did that come about? And then explain exactly what it is.
Sure. How did it come about? I mean, I've been thinking about it for like a year. Why have I been thinking about it? Because like I get off of one call with a GP that's decent. And they're like, I'm having such a hard time raising money and this is such a good deal. And I look at the deal and it's like decent. And then the next call is with an LP, and the LP is like, where do I find these good GPs? Like where I just like, I have $1 million and I can't place it. Where do I go? Like, do I just like, how do I start? Do I Google them? Is there like a place to go to get started? And of course, the answer is no. Like it's an extremely inefficient space. Many people will tell you like, oh, just like go to your neighborhood golf, golf outing or whatever it is. Like go to a club, go to the whatever. And like I actually think I don't know. So, like half the time, those things actually like are not good, because you're getting referrals from people who are either biased or inexperienced themselves. And so it's almost like, I guess it's a spiky road, And so that gets me to the idea, like, what is it? In my opinion, the biggest problem with LPs today is they just don't see enough deal flow. There's just no simple way for them to see deals and select 1 out of 10, let's say, to reach out to and get to know the GP and ask questions, right? And so that's what I set out to try to solve with this GP-LP match. The way it works is it's really just a network of GPs and LPs. The LPs sign up and they put in their criteria. As an example, like I'll just give you an example of me as an LP. I have my settings set. Like, for example, I might want to invest in industrial deals only, and it has to be in New York. Otherwise, I don't want to see it. And, like I want at least an 80% pref. I'm sorry, 8% pref with an 80% split, right?
Yeah, 80% pref. Wow. If you get one of those, let me know, and I'll invest right next to you. So
probably shouldn't actually, but that's another topic. So then comes along Brian, who's a GP, and he goes through like a very simple, it's like a 5-minute form, attach your deck, fill out this basic information, put in the address of the property, et cetera, et cetera. And like, let's say Brian is investing in a property in Arizona. So he clicks submit. My code goes through all the LPs, and I will not get the deal because your deal is multifamily. I want industrial, and I also want it only in New York, right? The next GP comes in, and it happens to be that they're buying an industrial deal, and it happens to match the 8 and 80, right, that I put in, and it happens to be in New York. And so if all the filters like return true, then I get an email that says, hey, you're getting this email because someone just submitted a deal that matches your preferences. If you want to reach out to the GP, here's the email. It's really that simple.
That's nice. That's nice. And I know you've been kind of publishing it on LinkedIn saying, hey, this deal was sent out to this many people. I'll be honest, I've seen lots of people try to set up platforms like this, but you got some really, really good traction right off the bat. I was looking at it. I'm like, well, of course he did. He's got this awesome LP newsletter. I think you say 7,000 people are on that letter right now.
Yeah, I think probably, I don't know exactly what percent, but I would imagine like maybe 60% are LPs.
Yeah.
There's, as you said, like there's a decent amount of GPs on there because they like seeing sort of the other side of the perspective.
Mm-hmm. Yeah, I love it. But I was very excited to see how much traction you got because I think a lot of people reach out to me with new ideas, and hey, join our platform. We're trying to get, 50 people or whatever. But it seems like you got a lot more traction than anybody else that I've seen try to put something together. So, me looking back at it, I think it's really because you did such a great job with those LP lessons. You put such valuable content out that people trust you. So that's my 2 cents.
I mean, like I think right now we're at like 920 LPs, which on the one hand is amazing, but on the other hand, to be honest, like I feel like I haven't even started yet. Like the LP universe in the US is massive, and like I haven't barely touched the surface.
Yeah. Yeah, well, because I big fan of what you're doing there, and hope it works. I started uploading a deal, but we're actually opening another 506c soon, and so I just. Cool. How about this? Is there any downside to having for a sponsor having more than one deal up there?
You could have different types of. I mean, I'm not going to send the same deal twice for obvious reasons. It just like emails the same LP twice. Like, what's the point? But if they're separate deals, I don't see why not. It just takes me, I don't know, like a minute to click a button, the code runs, and the emails get sent out.
Okay. Interesting. So I started filling it out, and I knew I had another one coming up soon. So you know what? I will put both of them up there. That's what I'll do. I'll put both of them up there. They are different deals. One's a value add, one's not. But I think that should trigger different investors because some are probably looking for value add and some probably aren't. So how about this? With all of your consulting, and a lot of people are, on the other hand, there's a lot of people with money to place, and a lot of people who are trying to raise money are struggling. Do you have any insights that you can give aspiring general partners on, how to reach these people or how to position themselves to get more investors?
I'll say 2 things. I mean, first of all, I think your best investor is your existing one. Mm-hmm. So you should probably think about treating them nicely and like respecting the fact that they're partners on your existing deals and being transparent and all the things that I think should be obvious, but are not in reality. Like just in my perspective, the best thing you can do is just be honest. Mm-hmm. Like I see a ton of GPs like sugarcoat the fact that they haven't really done a deal. All experience is helpful, but like it's not the same. I think the best thing you can do for yourself long-term is have reasonable fees and waterfalls. You should recognize the fact that it's your first deal and appreciate the fact that people are like, like spending time thinking about it and perhaps even investing alongside you. I think if you look at like the largest sponsors that started like 20, 30 years ago, what you'll generally find is waterfalls and fees that are very fair to LPs and rinse and repeat. I think in the beginning of the business, what many GPs, I think in a short-sighted way do is they look at like a model and they're like, man, if I just have 50% promote, like I'm going to be rich from one deal.
Yeah.
And I think what they don't realize, I say this very humbly, because like at the end of the day, it's a marketplace. And if an LP signs up for a 50% promote, they sign up for a 50% promote. Like that's okay. That's the market. I think what sometimes GPs kind of forget about is there's like a long-term game, right? And the long-term game is like, ideally your LP investor isn't investing in one deal. They're investing in like a deal per year or several deals per year. You should really try to optimize long-term happiness of the LP. And the best way to do that is obviously to perform, but B, to give them like the best economics you possibly can.
Yeah, it isn't simple. It's every time I put a deal together, there's a balance. We have to hit a certain return metric or no investor is going to look at it. If I were offering, 5% annualized returns, nobody's going to get into my deals, but on the flip side, if I'm not charging fees or if I'm not getting that promote, it's not worth my time. So there's always kind of a balancing act. Where would you draw the line between like acquisition fees, disposition fees, promotes, how would you suggest people put that together? Would you see, and maybe kind of guide you, would you rather see GPs with lower fees, higher promotes, or fees and promotes? What do you like to see on that side?
Yeah, so I think the second pillar of LP investing, which is what I wrote about, is alignment between the LP and the GP. I think the alignment really stems from three things. I genuinely don't think you can analyze one without looking at the other. First one is co-invest from the GP. The second one is the fees, right? Like whatever fees they're charging on the front end during the life cycle of the deal on the back end, right?
Mhm.
And then number three is just what is the waterfall? In other words, like what's the pref and what's the split? I guess what I'll tell you is I think for whatever reason, like GPs tend to focus on one of them. And to be candid, a lot of LPs don't think this way either, but I really think they should. Like, as an example, I get calls all the time like, hey, I can't believe I just got this deck. It's like a fraud. Like, this guy is trying to get a 50% promote. Can you believe it? And I'm like, yeah, I can believe it. Like, you didn't tell me enough information to be bothered by it. Did you look at the pref? And they're like, oh, yeah, I guess it's 12%. I'm like, oh, okay. Like,
That's
that's
different.
higher than usual. I'm not saying that's good, but like, that makes a lot more sense than an 8% pref with a
Mhm.
50% promote. Oh, and like, did you check the co invest? Yeah, it's 25%. Oh, like, that's also higher than
That's a
market.
big number. Yeah.
Yeah,
Yeah.
so like you get what I'm saying. Like at some point, you start looking and you realize that the picture is dependent on a lot of moving parts, and what's most important is all those moving parts have to be favorable enough to an LP
Mhm.
to act, while realizing that like most LPs, I guess in my opinion, unfortunately, don't think that way. So
Mhm.
what actually happens usually is like they just see something and they dismiss a deal because of it. So for example, 4% acquisition fee, and they'll be like, that's crazy, goodbye. But maybe they didn't look at the fact that it was like a $500,000 deal.
Yeah.
You know what I'm saying? And the
Yeah.
percentages and dollar amounts matter. I'm not
Mhm.
saying 4% is reasonable. Generally, I would say like even for smaller stuff, probably
Mhm.
should be 3, 2, right? And then there's a sliding scale down. But the details matter is my point.
Yeah, I mean, you bring up a good point. The very first deal that I put LP dollars in where I was not a GP actually had a 10-90 split. So the general partners were taking 90%. And when you mentioned the 50-50, that made me think of that one. But I also had a 15% preferred return, and it was a development deal. It was a 15% preferred return. And then a 1090 split after that, I made 25% on my money, And so at that point, after a 15% pref, I kind of looked at that and said, well, if I'm getting a 15% pref, if there's money to be made, I'm making the first 15 and 1090 after that. Awesome. But I like how you put that. It's overall, it's alignment. I wish I could put 25% equity in every deal that I do, but it is whole picture, I think is what you're saying.
Yeah, yeah, that's my point. And unfortunately, people don't like it. Like they want things to be simple, and I just don't think they are.
No, they're not. They're not. Me personally, I don't like to see super, super high acquisition fees. I think I'd rather see GPs make money on the promote. But, one of the things that you mentioned as well is, co-invest. If they have a really high co-invest, there's a lot of money. That's something that I hadn't quite considered. Maybe I had to go back to your LP lessons and get back to that lesson and reread it again. But well, cool, cool, cool. So how about this? I know you've got hard stop here coming up soon. So for new syndicators, people who are getting into this business, do you have any specific recommendations for them on what they could do as far as attracting LPs, keeping LP happy and stuff like that, besides what we've already talked about?
Before you get to the answer to your question, I think where this should start is, does this person truly understand what it takes to be a successful GP? I actually just wrote on this like 2 weeks ago. I think generally people that are starting out are like grossly underestimating the complexity. They think, oh, like I just need to learn how to underwrite deals. Oh, I just need to raise capital. Oh, I just need to find deals. And the reality is like you just need to do all of those. Right. And
Yeah.
I have a whole list in my article and explanations and stuff, but I think
Mhm.
that's the first part. It's just like, are you really signing up for what you would like to do? If the answer is yes, amazing. Okay, great. So then you get to the next step. The next step is fine. How do we raise the money? Again, to the extent that you have relationships, your best, and sometimes I'll actually get these reach outs. Hey, like I'm thinking about doing my first deal. Like, what do you think I should offer my family? And usually my response to that is, I guess it's like unconventional, but it's like, it's your first deal. I'm saying like,
Yeah.
if you're telling me that this is like a arm's length transaction and like you're across the table of some fancy person that's used to LP investments, then like, yeah, we can talk about normal splits and normal that and normal this. If this is your first deal and you're like going to mom and dad or uncle or whoever, like you
Hmm.
should probably just ask them what they want. And obviously as a GP, I hope you have like the wherewithal and the sophistication to then model what you're going to give them
Yeah.
and see if the deal still makes sense for you in terms of like return on hassle, so to speak. And by the way, the answer might be that it doesn't.
Hmm.
But at that point, you have to decide, are you doing this deal in order to get a deal on your track record, get some experience, or are you doing it for money?
Hmm.
Either answer is okay,
Yeah.
but I think you just have to go into it with, your eyes wide open.
Yeah. I like that. And quite honestly, when we got into our first couple of syndications, it was somewhat of a wake up call. I mean, it was like, it's not as easy as finding a property manager and letting them run everything. What I had envisioned was we find a really good property manager, we set that up, and it runs itself. Yeah, not quite the case,
Yep.
but so I very much appreciate what you said is make sure you understand what the entire business entails because a lot of people don't. Something else that I was thinking of, our first syndication that I did as a lead sponsor, we ended up doing a 90-10 split. And
Mhm.
our goal, you mentioned two different pathways. Are you doing this to get track record or are you doing this to make money? In my first case, it was for the track record. We knew it was going to be the first deal of many. We knew we were new and we wanted to
Yep.
try to incentivize as many people to get in as possible. So we had a 90-10. We had a six pref 90-10. I did not make a lot of money on that deal. It opened the door to a lot more deals, is how I looked at that one.
Literally verbatim, I said, if you think you can just hire a third party manager and move on with your life, you have either never worked with a third party manager or you're not ready to be a GP or
Yeah.
both. Sorry, but it's true. That's what I wrote.
Yeah, I mean, we just really pressed hard to get our leasing agent fired, and we did.
Yep.
But yeah, we have a third party property manager, and a little embarrassed to say this on a podcast that people are going to hear, but we have one unit that has been vacant for 120 days, you know.
Oh, it happens. Yeah, it
It
happens.
happens, it does happen. But when you start pulling the string and you figure out why is this unit, why has this unit been vacant for 120 days? All the fingers pointed back to the leasing agent, and
Yep.
we started putting pressure on the property manager to fix stuff, hey, get her the training she needs, look over her shoulder, do whatever you got to do. But if you just hand it over to a third party property manager and forget about it, you might get good service, but you're probably not. You're probably going to
Yep.
be lowest on their priority list. So that's just an example from this morning, but plenty of those, plenty of.
Sounds right.
But cool. Well, awesome. Well, I very much appreciate you coming on the show. Kudos to you for building such a great network, followership, I guess. And, your investing lessons are awesome. Very much appreciate
Thank you
those.
so
And
much.
anybody who's interested, we're going to put a link to that. It's lplessons.co, but we'll put a link to that in the chat. I guess we should also put a link to your LPGP. What's that officially called? The match
GPLP match.
GPLP.
Um, and I sent you a link to that in my bio too.
Awesome. And we'll make sure that's in there. Anything else that we should include in the show notes for people to be able to get in contact with you? I guess Twitter handle.
I think, yeah, yeah, I mean, it's pretty easy to find me just by Googling me. I guess fortunately or unfortunately have a pretty unique name, but you can definitely find me on LinkedIn. I post there several times a day. I post on Twitter even more per day. And, feel free to reach out. You'll find my contact information everywhere.
Awesome. Sounds good. Well, hey, thanks for coming on the show today and very much appreciate your time and probably one of my instant favorite episodes right here, and I'm sticking with it.
Thank you so much.
Appreciate
I'm
your
so, I'm
time.
so glad it was helpful. Yeah, thank you so much.